Japan's central bank held interest rates steady, and the decision is rippling across global markets. The Bank of Japan kept its benchmark rate unchanged at its latest policy meeting. It also updated its economic outlook, revising the forecasts it uses to guide future decisions. Together, those two moves tell investors a lot about where Japanese monetary policy is headed and when. The BOJ has been one of the most closely watched central banks in the world over the past 2 years. After decades of ultra-loose interest rates held near zero to stimulate a sluggish economy, Japan has been slowly, carefully pulling back. Each step in that process has moved markets. So has each pause. This is a pause. Officials want more time to assess whether Japan's recovery is durable enough to justify another rate increase. Inflation needs to stay on track. So does wage growth, a condition the BOJ has been explicit about. If workers are earning more, consumer spending tends to follow, and that gives the central bank more confidence that price increases will stick rather than fade. The global backdrop is making that judgment harder. Trade uncertainty, including concerns about tariffs and slowing demand from Japan's major trading partners, has clouded the outlook. Japan is a heavily export-dependent economy. When global demand softens, Japan feels it quickly. There is also the currency to consider. The yen has strengthened in recent months, partly because markets expect Japanese rates to keep rising over time. A stronger yen cuts into export earnings. It makes Japanese goods more expensive abroad. That gives the BOJ another reason to move slowly and avoid surprising markets. For investors outside Japan, the BOJ's path matters more than it might seem. For years, near-zero Japanese rates fueled what markets call the yen carry trade, where investors borrow cheaply in yen, then invest that money in higher-yielding assets elsewhere. When Japanese rates rise, or when markets expect them to rise, those trades can unwind fast. That means capital flowing back into yen, and pressure on currencies and bonds across Asia and beyond. Any signal from BOJ Governor Ueda on the timing of the next potential rate increase will be passed closely. Markets will also study the bank's updated economic projections. Any downgrade to growth or inflation forecasts could push back expectations for the next move. The phrase to remember here is the one the BOJ keeps using: gradual and data-dependent. That framing puts the burden of proof on incoming data. Watch Japan's wage figures and inflation readings in the weeks ahead. Those numbers will do more to set the BOJ's next move than any single policy statement. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.